Hello learners, welcome to Commerce Diction. Today I will discuss about what is liability and what are the types of liability. Let us understand what is liabilities. Liabilities refers to financial obligation to outside parties arising from events that have already happened. It means if we have taken any loan from outsiders in the past, it is our duty to pay off that loan in the present. So it is called as liability. Or it can be said as it is a claim of outsider on total assets of the company. It means if we have taken loan from outsiders, he or she can claim on the total assets of the company to settle their liability. Now let us take one example to understand liability. Suppose this is a businessman. The businessman decides to take a loan of rupees 10 lakh from bank. So the businessman approached the bank. Now the bank gives a loan of rupees 10 lakh to the businessman based on the agreement that the businessman will repay it in future. Now the businessman has to repay the amount in future, so it becomes a liability for the businessman in the present. Let us take one another example. Suppose this is a businessman. The businessman decides to purchase some goods on credit. So the businessman approaches the supplier. Now the supplier gives the goods on credit to the businessman. It means the supplier supplies the goods to the businessman based on the agreement that the businessman will repay the amount in future. Now the businessman has to repay the amount in future, so it becomes a liability for the businessman in present. Now liabilities are of three types. First is the current liability, second is the non-current or fixed liability, and third is the contingent liability. There are some other words which comes under the word liability like provisions, commitment. Okay. Now first let us understand what is current liability. It refers to liability which falls due for payment within 1 year. It means if we have taken any loan, we have to repay that loan within 1 year. These are also known as short-term liabilities because they are paid within a short period of time. Example, short-term loans, creditor who are the supplier of goods, outstanding expenses means the expenses for which we have got the benefit but we have not made the payment yet, like salary outstanding, rent outstanding. So these are to be paid within 1 year. So they comes under the head current liabilities. Now let us understand what is fixed liability or non-current liability. It is also known as long-term loans. It refers to those liability which are payable after 1 year. It means if we have taken any loan, now that loan can be repaid after 1 year. So these are called fixed liability or long-term loan. Example, long-term loans, debentures. Now debentures are the debt which are taken from public and for which the company issues a certificate known as debenture deed to the public. Now let us understand what is contingent liability. These are those liability which have not arisen yet but may become in future depending upon happening of certain event. It means these are not the liability for the company now but may become liability in future on happening of certain event. Example, claims against the company not acknowledged as debt. Now let us understand this with an example. Suppose the company has sold some defective items to a firm and the firm has made the payment to the company. Now on seeing the defective items, the company files a case against the company in the court. Now the company may win the case or may not win the case in future. Now if the company wins the case, it does not have to make the payment in future, so it does not becomes the liability. Now if the company loses the case, then it may have to make the payment in future, so it may become liability in the future. So it depends upon the happening or non-happening of certain event. So it is said as contingent liability. Now let us take another example, that is bank guarantee. Suppose Y Limited takes a loan of rupees 1 crore from bank and X Limited guarantees on behalf of Y Limited for that loan. In that case, if Y Limited for any reason fails to make the payment, then X Limited will be answerable to bank. That is, the X Limited may have to make the payment in future. So, if the Y Limited fails to make the payment, then may X Limited will make the payment in future and it may become the liability in future for the X Limited. So, it depends. Therefore, X Limited has to disclose this liability as a contingent liability in the books of account. Since these are not the actual liability, so they are shown in the footnote of balance sheet. Okay. Now let us understand the word commitment. It is an agreement to perform a particular activity at a time in future under certain circumstances. Example, capital expenditure contracted, not yet incurred. Suppose a company agrees to purchase a machinery from XYZ Limited worth rupees 10 lakh in future. Now this is a commitment by the company to the XYZ Limited to purchase a machinery of rupees 10 lakh in future, which has been contracted but the expenditure has been not yet incurred. So it is a commitment for the company to purchase that machinery in future. Now let us understand the word provisions. It is the amount set aside by business for future obligation. These are the estimates of probable loss related to future for events undertaken in past. Example, provision for bad debt. Now let us understand this with an example. Suppose we have sold some goods to different customers on credit. It means the customer will make the payment in future. Now we have a doubt that some customers may not make the payment in future. So we make an estimate of the loss and create a provision out of the profit. Now this becomes the liability if the loss incurs in the future and we may have to suffer or we may have a negative impact on the business.